Today we're going to be talking about starting an LLC in 2025 and some of the mistakes that you need to look out for before you start a brand new LLC. The first thing I want to discuss is not obtaining your EIN number. So your EIN stands for your employer identification number, and it's essentially your business's social security number. It's issued by the IRS and used to identify your business for tax purposes. So whether you're filing taxes, applying for a new business license, or setting up a business bank account, your EIN will come in handy. You definitely want to have this, guys. But here's the kicker. If you're just starting an LLC, having an EIN is not just important, it's absolutely necessary. So why is it such a big deal? I'm sure you're wondering, like, why is this a mistake, not obtaining your EIN? The first reason is liability protection. One of the main reasons why people form an LLC is to separate their personal assets from their business liabilities. This is huge, guys. Without an EIN, your LLC isn't fully separated from your personal finances, which could be a risk. When you form an LLC, you're basically creating a legal wall between your personal and business assets. Using your EIN ensures that that wall will stay intact and everything is completely separated. Once you obtain your EIN number, you should open up a business bank account, and your business expenses should all be paid from this single account. As an LLC owner, you want to keep your business and income expenses separate from your personal income and expenses. So let's say, for example, you were in a lawsuit or an IRS situation came up. It's possible they could seize everything if they can't tell the difference between what's your business and personal funds. Another important reason has to do with business credit. If you want to obtain business credit cards, you definitely want to start building this by using your EIN, so it's not associated with just your personal information. It will also be associated with your business. The second biggest mistake that I see with brand new LLC owners, it's understanding your income. One of the main things about starting a business is actually taking advantage of tax breaks. There's a lot of tax breaks that you will only receive when you get a certain type of income. So most LLC owners set up this business structure without understanding what type of income they will be making and how that income actually impacts taxes. The type of income you receive will determine whether you use an LLC, an S Corp, or even a C corporation. Some people set up an LLC when they might be better off with a different type of structure altogether. Let's talk about the three main types of income. The first one is ordinary income. This is the income that you get for working, like a regular job. You get a W-2 or a 1099. This is ordinary income. If you earn W-2 income through your LLC, it will subject you to Social Security as well as Medicare, state tax, and federal taxes. The self-employment tax of 15.3% covers both the Social Security and the Medicare taxes for an LLC that makes less than $50,000. So this type of structure makes sense until the business starts to make more than $50,000 in business profit. So it's not too bad at first, but once you start to make more business profit, it will make more sense for you to switch over to an S Corp in most cases. And I talked about this previously in a video about splitting your income into a salary and a distribution portion. Only the salary will be subject to payroll tax, which can reduce your tax burden. Again, this all depends on how much money you're making. Now, the second form of income is passive income. Passive income is technically money that you don't work for. If you want to think about passive income in terms of what type, think about long-term rental income. That would be considered passive income. Now, passive income is not subject to Social Security or Medicare taxes. This is a huge reason why so many people in real estate use an LLC. The third income is portfolio income. Now, this is income that's generated from your investment portfolio. This can include capital gains from selling stocks or bonds. Now, the business structure for your portfolio income depends heavily on the assets that you invest in and whether the business is generating other types of income. This is like a case-by-case basis when it comes to portfolio income, and usually you see this with a more established business that has assets or that has a lot of income, and they're looking to put it places and to grow it, because your biggest expense for any business or for an individual is always going to be taxes. So when you start to make a lot of money, you definitely want to understand how you earn so that you can save money on your tax burden. The third biggest mistake that I see is not establishing an LLC for real estate. So many people purchase investment property and they do it in their personal name, and then they try to transfer that property to an LLC at a later time. Now, what I previously just talked about is the reason why people use an LLC when it comes to real estate. They don't put it in their personal, and they don't use an S corp. They use an LLC. This increases privacy for those that maybe don't want to disclose your personal information when you own a rental property. So you definitely want to be able to keep that privacy. You can also be personally liable for lawsuits against your rental business. Like, let's say a tenant slips and falls and they want to sue the rental business. Now they can sue you personally because you're personally liable since you went ahead and got that investment property in your own personal name. Now, this could force you to, in the worst case scenario, file for bankruptcy if you can't afford any legal fees or you can't afford to pay out this suit. Now, you do have the option to transfer ownership to a brand new LLC later with a quick claim deed. It can be kind of a tough process though, depending on who you have your mortgage with. Some mortgages have a due on sale clause, meaning that the entire mortgage can be due if ownership of the property is transferred. So you may have to shovel out millions of dollars just to be able to move an asset from personal to this LLC and to get this protection. So no one really wants to have to go through that. The best thing to do is, one, always do research, but definitely, if you're doing something that's related to real estate, put it under your LLC. If you are in a situation where you did buy a rental property and it's under your personal name, I would definitely look at consulting a tax professional in this situation. Let them know exactly what's going on. They'll be able to help you to make sure that you're doing the right steps. Because again, all of this can be a case-by-case basis. It just kind of varies depending on who you are in your personal situation. These are the other common mistakes that you normally see associated with creating an LLC. The first one is a high-risk business. So you'll be denied for loans for funding just because your business may be something that banks tend to shy away from. And this could be because your industry is high risk of defaults, or if a bank was to take a risk on your business, they would have to pay out higher insurance premiums, which can be very volatile depending on the industry that you're in. That's the reason why a lot of banks will shy away from high risk. Now, there are also some exclusions on government contracts depending on the business that you're in, as well as fewer payment processing options. Certain industries tend to be subjected to higher rates of chargebacks, thus having higher processing fees or just being flat out rejected. I've seen this myself, depending on what you're doing, like even selling digital products. Sometimes payment processors will just flat out stop processing your payments. So you'll have to go with someone else that will. This can be very difficult, especially when you are brand new and you have no idea why this happened. Finding a new payment processor can seem like a challenge, but that is something that will be based off of your business type. Now, I'm going to give you a few examples, and I want to say take this with a grain of salt because even my industry I've heard is high risk. So it's, I haven't had a problem with getting funding, but this can vary. So some examples of this are auto dealerships. Believe it or not, they are high risk. The cannabis industry, financial services, investment firms, credit repair, anything like that is seen as high risk. Bars and nightclubs, weapon stores, pawn shops, real estate is seen as high risk. These are industries where if you were looking at trying to establish some sort of business funding relationship, it may seem challenging in the beginning. Now, there are a few of these where if you were successful and you showed enough income, then banks might be willing to take a risk on you. I'm going to give you an example of a couple of low risk industries. There are educational services, accounting. This is a great example. Legal services. Now, the reason why these are great examples and why I use them is because they are tightly regulated, hence the lower risk. Not everyone can do these types of industries, and because not everyone can get into it, it's very, very unlikely that they will be risky if someone is in one of these categories. The next one that I want to mention is home address. Now, this is a big one, and a lot of people probably already know this. If you have your home address listed as your business address, this is public information. Anyone can go online with a quick search and they can see where you live at. They can literally show up at your house because they can find this information very, very easily. That's another reason why I don't recommend using your personal phone number in order for you to have a business. I suggest having a business phone number, a business email, a website. Treat this business like it's a completely separate entity. And if you want more information about that, I have this all in a video where I discuss business structure. I recommend that you watch that. You want to use a virtual address if you cannot afford an actual business address. A virtual address will be very similar to a PO box, except it will have a physical location attached to it. My recommendation, get a actual virtual office. That's going to be something where there is no mailbox number. It's simply just an actual address with a suite. That does cost a lot more, but you can get that with Regis and you could get that with Alliance Virtual Office. I have had it where people have asked me in banks, Wells Fargo, Chase, Bank of America, is this a virtual address? If I say yes, they say that's fine. We need your physical address for the address on file, and then we will use this for the mailing. That's usually what happens with me. I haven't had any other issues, and I pay about $119 or some odd dollars for that for the whole year. With Regis, I would be paying around $100 something per month. So that's just the difference. The last thing I want to mention is your business name. Choosing a good business name can be very important, but it's something that's, I think, is overlooked. And I'm not talking about the risk of an industry. I'm talking about trademark holders. So someone can sue you if you infringe on their intellectual property. And even if you win the lawsuit, it will cost you a lot of money just to defend yourself. To avoid that, do some quick research. Google the name. Similar names can cause confusion for customers. But the most important thing for me is search engine optimization challenges, SEO. Believe it or not, that's one of the main things with YouTube that helps you get traction. For your business, it works the exact same way. People will not be able to find you or discover your business if, when they go to search it, someone else has taken that same name or similar name and they're ranking very high in search engines. That will almost make your business non-existent, and that can be the death of a business. So it's really important for you to do this research. So being able to establish an online presence, crucial. You want to make sure that your business name is not diluted when it comes to SEO research. You want to thoroughly search your state business registry. You want to check for trademark data. And then you also want to do a domain name database search. One of the things I say in my structure video, before starting a business, the first thing that I establish is a Google Voice number for the business number. You can always transfer it to your carrier later. I establish a website domain name because I want to make sure that I can get my domain name. I do my business name search. I get my EIN number, and then of course, virtual address. That way, all of this stuff has already been found before I go to incorporate my business. That way, from day one, I have a number, I have a website, I have a business email. I'm going to have my business SEO search already done, and I'm going to make sure to get my EIN number. So when I go to take all this information and finally incorporate from day one, it's all going to be there. And once again, this goes into my entire video that I put out on structuring your business. If you guys want, you can watch that after this video, and it'll tell you, exactly the rundown of what you can do. Thank you guys so much for watching this video. If you have any other questions about establishing your business or business credit in general, then you can drop that in the comments below. One of the main things that I want to really drive home this year is that you guys need to have businesses that are actually making money, because the biggest challenge that you have is not getting business funding, it's taxes. That is the main thing that you're gonna have to combat with when you make a lot of money. So regardless to you getting funding or doing any of that, taxes will be your main challenge, which means you need to have business taxes done. You need to have documentation. You should be getting business lines of credit. You should be able to qualify for all of these other things. There's no excuse for you not to be. And it's not just about business credit cards or getting Business funding, it's about establishing an actual profitable business that you can leverage money with, make money, file your taxes, and then save money on your taxes so you can take most of that money home and you can invest it into assets and continue to grow your wealth. Once again, thank you for watching this video, and you guys have a wonderful day.